Hey everyone, and thanks for jumping back into the Equityverse. Today, we're going to talk about the NASDAQ, and we're going to be looking at seasonality in pre-election years. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I understand it's called Into the Cryptoverse. We actually do have a lot of different charts for equities and macroeconomics, as well as you will see in this video. Now, we have been talking a lot about seasonality in the S&P and in crypto, and I thought for just sort of a change of scenery, why not carry out this analysis from the perspective of the NASDAQ? Going into this, I should say that, as always, there is no guarantee in financial markets. We cannot look at the context of history and tell us what has to happen. No one knows what will happen. No one knows. The markets could go one way and make you think it's going to happen, and then before you know it, it's completely reverse course and going back the other way. But what I want to do is at least go through the prior pre-election years to see if there's any seasonality that we can take away from it. And if you followed my videos for the last several weeks, we've been talking about this leading up to it. So hopefully this is not coming as any surprise to anyone. But in general, this is what the year-to-date ROI of the NASDAQ looks like in 2023. And this is what it looked like in 2019. The first thing to note is that around this time, we had a seasonal correction. In the August-September timeframe of that pre-election year, we saw the NASDAQ get a correction. It sort of hung around those lows for a while, then ultimately headed higher in Q4 of the pre-election year. Now remember, one of the things I've said the entire year is that the stock market can climb the wall of worry until the labor market finally loosens up. The labor market hasn't really loosened up yet, and so we've seen the stock market continue to climb the wall of worry. While markets can climb the wall of worry, that doesn't mean they do so in a monotonic fashion. It's often a stochastic process, just like all markets are relatively stochastic. If you look at this chart, though, you'll see there is a correction around this time frame. Now, there's also a correction back over here, and the NASDAQ didn't get it this year. So rather than cherry pick a single year, let's go through and look at several of them, right? So this is what 2015 looks like. You can see there was a fairly substantial correction coming in on about day 229. For reference, we're currently on day 214, so it's only 15 days from now. Another seasonal correction around the August to September timeframe. If you look at 2011, another correction right around this timeframe. 2007, same idea, right? Another correction around this timeframe. 2003, pretty similar idea. 1999, same thing, right? So you can see that going back to 1999, there's been a seasonal correction in Q3 of the pre-election year, right? There are some exceptions to the rule, and I want to go through those now. So one of those exceptions, and I'm going to clean up the chart here, we're going to go back to 2023. One of those exceptions is 1995. You can see that in 1995, there wasn't a substantial correction in the NASDAQ in Q3, but we basically ended the year where we were at this point. So if there's not a correction, or at least not a substantial one, I mean, I know you're probably looking at the charts today, it's like, well, the NASDAQ's down, but I'm talking about like a 5 to 10% correction. If there's not a correction, it doesn't mean that it's just going to go straight up for the rest of the year. It could just consolidate until the end of the year as well. You can go look at 1991, which is another example where you didn't really see that substantial of a correction, but it essentially just sort of leveled out here. It then started to go back up into Q4, the very end of the year, but it was around this time frame where consolidation started to really take hold. So 1995 and 1991 are generally exceptions to the rule based on what we've historically seen. Now, if you look at 1987, it's somewhat of an exception to the rule, not because it didn't go down. We actually saw a huge drop in the NASDAQ in 1987. The main difference, though, is that in 1987, the drop didn't occur until October. Okay, so it was actually still a bit out from where we currently are before that correction actually ensued. So you could argue that the three pre-election years that look the most dissimilar to the last, 5 or 6, however many we went through, were in a row: 1987, 1991, and 1995. And in all three of those cases, the NASDAQ did not get that seasonal correction around this time frame. But if you look at the others, you can see that there was. And to better illustrate that, let's take an average of 2019, 2015, 2011, 2007, 2003, and 1999. The last 6 pre-election years for the NASDAQ, average it out, this is what the chart looks like. So normally you can see the NASDAQ in pre-election years, going back for the last 6 pre-election years, has found a bit of a correction around this time frame. For reference, historically, the correction on average was over by day 222. We're currently on day 214. Now remember, if a recession materializes, let's say at the end of the year or early next year, then you can of course forget about seasonality, right? I mean, there's examples in history where a recession could occur and it doesn't really matter what's going on from a historical perspective. Take an example from say like 2001, where the S&P was just going down, where if you were to compare that to say 2005 of course looks a lot different. If you were to compare that to say, let's think to another good one. So there's 2021, because the S&P was going up. 2017, the S&P was going up. 2013, the S&P was going up. But 2001, the S&P was going down, right? So if you get a recession, of course, you can throw seasonality out the window. And so that's, of course, something that I think is worthwhile to consider, in that in a lot of these pre-election years, you get a correction followed by a surge going into the end of the year. That surge that could potentially happen in Q4 will be dependent on if recession risk materializes or not. If the labor market remains resilient through Q4, then of course you could see the NASDAQ continue to climb up later on in the year. But if the recession does materialize by then you would not expect something like that, right? You might expect it to play out more like 2015 at the very least, where rather than get an exceptional rally to end of the year, it might just sort of level out for a bit, right? So something to consider. And I just wanted to sort of put that on everyone's radar in case it hasn't been on your radar so far. We could also look at this with the S&P 500, and I just want you to know that you're going to basically see the exact same thing. So if you were to average out the last 6 pre-halving, this is a crypto channel. I hope you're aware. But pre-election, pre-halving, maybe we should just start calling it pre-halving and make the people that think about it as a pre-election think differently. But if you look at it like this, look at the last 6 pre-election years for the S&P 500, you'll see a very similar seasonal correction by the S&P 500. And so that's what I think we are sort of faced with right now is this just that seasonal correction that we tend to get? And if it is, then it could mean some suppressed prices in the S&P for a couple months to come. Note that there is some confluence in this. And that's the fact that, I mean, right now we are seeing the S&P get a considerable drop here. I mean, this is a somewhat substantial drop, especially, considering that there hasn't really been a substantial drop in quite some time. But there is some confluence here in things like the 10-year yield that has broken out, has back tested, and is continuing higher. And when you see things like the 10-year yield, the 30-year, when you see that sort of stuff breaking out to the upside, historically, at least in 2022, it did not correspond with risk on, it corresponded with risk off. So if you were to take the NASDAQ and overlay it onto this chart, you'll see that oftentimes if the 10-year yield is breaking out, that's not really a great thing for the NASDAQ. You can see here it was going down while the 10-year was going up. You can see that when the 10-year was going up here, the NASDAQ was going down. And if the 10-year does start to break out again, then of course it could lead to a risk-off environment for the equity markets. And I mean, at this point, it does still look like the 10-year yield is in fact trying to break out. Note that every time historically it keeps getting above 4%, something seems to go wrong, and then we sort of kick it back down. Like back over here in March, when it got above 4%, we saw the regional banking crisis, and then it came back down. But because of the Federal Reserve coming to the rescue of the regional banks, we have seen the Fed go higher for longer, just as they said they would, and markets are finally starting to sort of believe the Fed that their resolve to fight inflation is actually quite strong, and they're not going to sort of bow down just because the bond market thinks they're going to pivot. I mean, so far they have just sort of stuck to their guns. So I think that in the context of the treasury yields, right? Like the 10-year yields, if you look at 30-year, you can see that. I mean, it's also above 4% as well. When you look at it in the context of this, normally when these things are breaking out, it's a risk-off environment, okay? So there is some confluence there. And so I think we need to be at least aware of this seasonal correction in the S&P 500 and the NASDAQ around this time frame. We, of course, know how it would relate to crypto. Historically, for Bitcoin, we normally see a correction around this time in the pre-halving year. You like how I snuck in Bitcoin? I like to think there's someone out there that has no idea about Bitcoin. They just clicked on the channel because they wanted to hear about the NASDAQ, and they're like, now this schmuck's talking about Bitcoin. But just if you're aware, historically, we have seen a move by Bitcoin below its 20-week moving average in that Q3 time frame of the pre-halving year. And so I would argue that there is still a chance that it happens this time as well. Remember, a risk-off environment could easily be detrimental, more so for the altcoin market, just because of how little liquidity there is. In fact, it was in Q3 of 2019, the pre-halving year, where a lot of altcoins that at least were going to survive bottomed out against Bitcoin. So there's a lot of confluence, I think, in the markets. And we've seen these similar patterns play out before. I just wanted to remind you that there are exceptions to the rule. Even with the S&P 500, if you were to go look at 1995, or sorry, this is I was looking at Microsoft earlier. Why don't we just look at Microsoft now that we have it up, right? So here's 2023, and then here's 2019. There's a good example of where it sort of just leveled off for a while. Let's look at 2015. Pretty big correction in Microsoft. 2011. Another substantial correction. 2007, you can see it went down. 2003, seasonal move to the downside. So I mean, again, like it's somewhat market wide. And while we're here, why not average it out just to see if it tells the same story? So average out 2019, 2015, 2011, 2007. See, I need to just create a button that allows me to just click all the pre-election years, so I don't have to go through each time. You look at this, add it, and you can see even here there's a correction. And look at this, like when you look at seasonality here, it shows that Microsoft tends to find a local top around day 200. Here it topped out on day 199. It then says it bottoms out typically on day 234, which would essentially be early September. So I think it's interesting to sort of find this confluence in the markets, to see the NASDAQ and the S&P find a seasonal correction in August, September of the pre-election year. Bitcoin tends to get a correction that takes it below its bull market support band in Q3 of the pre-halving year. That tends to lead to the final capitulation of alt Bitcoin pairs, at least the alts that are going to survive. The alts that are not going to survive will just fade into the depths of the Cryptoverse anyways. And then we start finally making progress in where we are within the market cycle. But anyways, if you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. See you guys next time. Bye.